So today, let's look at taxation of insurance. Let's look at taxation of insurance. How do we tax insurance business? Taxation of insurance.
Good morning, sir.
Good morning.
Yeah, from the video I watched, you didn't finish the second question. You said you would finish it or fix a date during the week, which never happened.
Oh, for the second question
Yes, sir.
on taxation of banks.
Yes, sir. So people can talk. People that were in class that they can talk. Babatunde Bank Limited.
Okay. I couldn't finish the question.
Because your laptop was dead.
What do you say?
You didn't finish it because your laptop was dead.
Oh, my laptop was dead. Yeah. I remember. So on the question on Babatunde Bank, I stop at where? You know what I will do? During the week, which time do you have a free lecture?
I don't know if you can fix for Friday.
Friday. Yeah, I will prefer that. So I will prefer that. I will fix for Friday so that I can link some of our students in VI and in Solo too. Let's arrange on Friday. So what you help me talk to admin, Mr. Wasil,
Okay,
that lecture corporate reporting. So you should try to send the invite. So after the class, somebody should just send message to him to say that we are fixing lecture on Friday. So me too, I would prefer that we have our lecture twice in a week so that we can finish on time as well as we can even understand very well. So I'm available on Friday. So the lecture can be from 8:30 to 9:30, just 1 hour, so that we not stress ourselves since we have lecture in the other day, in the next day. Just 1 hour. If we can stick with that 1 hour, we gain a lot. We don't need to stress ourselves with 2 hours, 3 hours. 1 hour. And we achieve a lot. So on Friday, I promise I will start it from the beginning as regards to that question on Babatunde Bank again. So today, we look at taxation of insurance company. How do we tax insurance companies? Section 14 of CITA deals with how we tax insurance company. Section 14 of company income tax states how insurance company will be assessed to tax. In that section 14 of the section go further by saying that insurance company will be taxed based on their line of business, meaning that we are going to tax majorly. Insurance business can be divided into two. We have life assurance business and non-life insurance business. That means if a company, an insurance company, is engaged in composite insurance business. Composite insurance business simply means that company do life business, they also do non-life business. That means they will be taxed separate. They will be taxed separate. On life, they will be taxed separate on non-life. What this one is saying now is the way we tax life assurance business is different from the way we tax non-life insurance business. So a company that is doing both life and non-life, we pay two tax. You will pay a separate tax for non-life. You also pay a separate tax for life. So the format for tax computation for life business is different from the one of non-life business. The format for tax computation of life business is different from non-life business. What is the difference between taxation of life business and non-life business? One of the major difference between taxation of life business and non-life business is that premium received from assured under a life business does not constitute income. But under non-life business, the premium that you receive from the policyholder will constitute part of your income. That means under life business, premium received is not taxable. Why under life, premium received is not taxable? Why under non-life business, premium received is taxable? Claims too. Claims paid to the policyholder under life is not allowed as an expenses, but under non-life, claim is allowed as an expenses. So those are the major difference between life and non-life business. Another unique thing on this insurance, taxation of insurances, insurance companies too, they pay NICDA. They paid what? NICDA. What is full meaning of NICDA? National Information Technology Development Agency levy. NICDA levy is as what rate? 1% of your profit before tax. Insurance companies to pay NICDA, like bank, telecommunication. So insurance companies to pay NICDA. Now, Finance Act 2020, which made some adjustments as regards to taxation of insurance. The last adjustment that was made regarding to taxation of insurance company in Nigeria was done through Finance Act 2020. The last adjustment that was made as regards to taxation of insurance was done through Finance Act what? 2020. The Finance Act 2020, one of the changes it made to insurance is insurance companies can now carry their loss indefinitely. Prior to Finance Act 2020, insurance companies can only carry their loss for for maximum of 4 years. But with Finance Act 2020, insurance companies can now carry their loss forward indefinitely, like any other companies. Finance Act 2020 also defined investment income as income derived from investment of shareholder fund. Finance Act 2020 defined investment income as income derived from investment of what? Shareholders fund. Under the Finance Act 2022, it differentiates between gross income and gross premium. Gross income and gross premium. In Finance Act 2020, if you want to compute minimum tax for a life business, we compute it based on percentage of gross income. Why, if we want to compute minimum tax for a non-life business, you compute it based on percentage of gross premium. That means in life, we use gross income to compute minimum tax, as stated in the Finance Act 2020. Why for non-life, we use gross premium to compute minimum tax for insurance business? Those are the changes insurance Finance Act 2020 effects about insurance business. The major thing we need to know is, how do we compute tax liability for insurance business? We start with the tax computation for life business is different from non-life business. Tax computation for life business is different from what? Non-life business. Let's look at the format for computing tax for life business. What is the format for computing tax for life business? If you want to compute tax liability of a life assurance business, you start with what is called investment income. You start with what is called what? Investment income. Under the investment income, example of investment income is debentures interest, interest on fixed deposit. If an insurance company receives dividend, dividend is a non-taxable income because it's a frank investment income. So you cannot put dividend under investment income because dividend is not subjected to tax. So the only investment income we have, as stated in the Finance Act 2020, debenture interest, interest on fixed deposit. You add the two of them. Taxation, format for tax computation for life assurance business. You start with investment income. After you get your investment income, you now have your other income. What are your other income? Management fee, commission received, actuarial valuation surplus, rental income. Any other income received by life assurance business that is taxable will be posted under other income. Now, summation of your investment income and other income is going to give you what is called gross income. Summation of your investment income and other income will give you what is called what? Gross income. If you get your gross income, you now deduct allowable expenses. What are your allowable expenses? Number one allowable expenses is, number one is, you compare the lower of the following. Sum of this, the sum of general reserve carry forward and life fund carry forward. You sum the two of them. You compare it with less net liability on policy. You compare it with net liability on policy. The lower between the two, the lower between the two is what you are going to take as part of number one allowable expenses. That number one allowable expenses is called general reserve. How do we get your general reserve? General reserve carry forward plus life fund account carry forward compare with net liability on policy. The lower between the two will be your general reserve. Number two expenses that you are going to deduct is called special reserve. Special reserve is going to be higher between 1% of your gross income, gross premium, higher of 1% of gross premium, or 10% of net profit. Higher of 1% of gross premium or 10% of net profit. When you compare that, the one that is higher, you take that. That is your second expenses. The third expenses under the allowable expenses is called other allowable expenses. Other allowable expenses like rent, salaries and wages, repair and maintenance, telephone and postage, any other expenses that is allowed, that is not special reserve, that is not general reserve, you put them under what? Other allowable expenses. You add the three expenses together. First expenses is general reserve. Second expenses is special reserve. While the third one is other allowable expenses. When you put them together, you are going to minus it from your gross income, the sum. When you minus them from your gross income, you get your adjusted profit. From your adjusted profit, if there is any loss, you relieve. If there is any loss brought forward, you relieve. If there is no loss, you now less your capital allowance to get your total profit. From your total profit, you can now compute your tax liability. However, anytime you are computing tax liability for insurance business, you must compute the minimum tax too. You compare the minimum tax with company income tax. Insurance business pay company income tax, they pay tertiary education tax, they pay police development levy, they pay NICDA. But when you compute the minimum tax, you compare it with company income tax. The higher between company income tax and minimum tax is what the company will pay as company income tax. The higher between the minimum tax and company income tax is what the company will pay as company income tax. That is the format for live business. What is the format for non-live business? Non-live business. Let's look at format for non-live business. If you want to compute tax liability of a non-live business, you start with, if you look at under the life, under the income, you will see that I did not use premium. Under format for life, I did not use premium. But under the non-life, the format for tax computation for non-life, you are going to use premium. You start with premium. Gross premium means the total premium that you receive from your policyholder. We are in the format for computation for non-life tax liability. For non-life business, the tax liability of a non-life business now. You start with gross premium. In insurance, we don't add back disallowable expenses, because we are not starting from net profit. Assuming we are starting from net profit is when we add back the salariable expenses. No. So gross premium less premium return or premium cancel, premium return on cancel policy. There are some policies that may be cancelled. You will return the premium back to the policyholder. You less it. Reinsurance premium too, you paid. Maybe you are a smaller insurance company. You want to reinsure your risk with a bigger insurance company. You now go and reinsure your risk. That premium you pay to their bigger insurance company is called reinsurance premium. You less that too from your gross premium. There are two things you will less from your gross premium. Premium cancel on cancel policy, you less it from your gross premium. Reinsurance premium paid, you less it from your gross premium. At the end of the day, when you less that, you get what is called net premium. From your net premium, you will add investment income. You also add other income like fees and commission, rent received. Another thing that is very important that you are going to add as part of your other income is estimated insurance claim for previous year. Under non-life, you are allowed to make provision for insurance claim. Claim means damages that you pay to the policyholder when they suffer loss. That claim that you pay to the policyholder, under non-life insurance, you can make provision for insurance claim, which is estimated claim. The estimated claim that you make this year, if nobody is coming to claim it up to the end of the year, by next year, it will be added back as an income. Take for instance, estimated claim of year 2023, and we are told that nobody came and make, the policyholder did not come and claim part of the estimated claim. You do not make use of that estimated claim. In 2024, that estimated claim of 2023 year end will become an income in 2024 because you have used it to reduce your profit before. It will become an income in 2024. That is estimated claim of previous year. You add back. At the end of the day, when you add your net premium plus your investment income and other income together, when you add everything, you will get what is called gross income. You will get what is called what? Gross income. If part of this income under your other income is non-taxable, you can now come and less them again. But it is better when you see any income that is not subjected to tax, don't use it at all under insurance. After you get your gross income, you can now less unexpired risk. Less reserve for unexpired risk. When you less reserve for unexpired risk, you also less commission paid. Aside that, you also less other allowable expenses from your gross income. Insurance claim and outgoing, your insurance claims too. Both actual insurance claim can be two. Actual total claim, estimated claim. The two of them, you add them together. You come and as part of your less. All what you are lessing from your gross income. Unexpired is first, commission paid second, allowable expenses third, total claims and outgoing, both actual and estimated, fourth. You add them together, you now less them from your gross income so that you will get your adjusted profit. So that you get your what? Adjusted profit. Once you get your adjusted profit, you can now less your capital allowance. Before you less your capital allowance, if there is any loss you want to relieve, you can relieve that first. After that, you less your capital allowance, you get your total profit. And you can start computing your tax liability. You can start computing your what? Tax liability. So let's look at question for life and non-life insurance. We still talk about reinsurance. We still talk about reinsurance. Question, let's start with the simplest question. Question 6. Somebody should help us read. Below is an extraction made from the financial statement and income tax return of Premium Insurance Limited for the year ended 30th June 2020 and 2021 respectively. Net profit before claim and outgoing. Estimated claims and outgoing. Actual claims and outgoing. Required, compute the assessable profit for the relevant year. Compute the assessable profit for the relevant year. How do I compute the assessable profit? Premium Insurance Limited, computation of assessable profit. Net profit before claims and outgoing for 2020 is 36 million. For 2021 is 28 million. The estimated claim and outgoing for 2020, 12 million. The actual claims for 2020, 7.5 million. Because this profit is before claim and outgoing, you less it. You less the claim and outgoing from them. When you less the claims and outgoing from them, you will get your assessable profits. Mind you, in 2021, net profit before claims and outgoing, 28 million. The estimated claims of 2020 is going to be part of income in what? Is going to be part of income in 2021. So this 12 million in 2020, you will now write estimated claim and outgoing of previous year You add it as part of income to the net profit in 2021. Before you now less estimated claim of 2021, you less actual claims of 2021 so that you get the accessible profit. This is direct question. Any question here? Any issue here? Hope this question is clear. The estimated claim and outgoing of 2020 will serve as an income in what? 2021. Will be added as an income in 2021. Let's look at another question. Let's look at another question. So let's look at another question. Which question can we look at? Question Question 7. Global Insurance Company Limited carry on both life and other insurance business. Global Insurance Company Limited carry on both life and other business. Other insurance business. They receive a gross premium of how much? 72,050,000 in its accounting year end 31st December 2023. The total amount of 12 million naira investment income was also received within the accounting year for life business, while 25 million naira was incurred as total expenses. From the analysis of the amount listed below, together with capital allowance given, you are required to compute the tax liability of the company and state your year of assessment. Number 1 analysis given to us. Premium income received on life business, 17,250,000. Premium income received on burglary, 22,250,000. Premium income received on industrial asset, 21,500,000. Other policy premium is what? 11,050,000. The total premium is going to give us what? 72,050,000. That total premium that they give us from the beginning of this question, this 72,250,000, this is the breakdown. Look at the breakdown. The management of the company calculated about 14 million as reserved for what? Unexpired risk as at December 31st, 2022. And about 17,500,000 was also calculated as at December 31st, 2023 on non-life. 4 million naira was yet to be collected as premium on life. And 2 million naira on non-life for the year ended 31st December 2023. As at 31st December 2023, actuarial valuation of life fund was administrative expenses, salary for life departments, other allowable expenses. Investment income. Investment income. What is investment income? Investment income is given. Dividend received, net of withholding tax. Gross interest received on debentures. Interest on fixed deposit on bank. The total investment income is 12 million naira. Interest on fixed deposits of 430,000 for the accounting year end 31st December 2023 was accrued. The total expenses relating to non-life business is given. Claims, commission, administrative expenses. Loss on sale of fixed assets is included in the administrative expenses, while estimated claim for the year 2022 was 274,000. The capital allowance is given now. What is the capital allowance? Capital allowance brought forward initial allowance, annual allowance, balancing allowance, everything is given. So require compute the tax liability for the relevant year. This question has information for both life and non-life business. For us solving this question, we need to know the format very well. If I want to compute tax for life, I will start with investment income. I want to compute tax for life, I will start with what? Investment income. Under my investment income, what did I have? Interest, debenture interest, interest on fixed deposits. Now, go back to the question. We first of all compute the adjusted profit for life. I will now compute the adjusted profit for non-life. Because the two of them are the same capital allowance, That is the reason why we cannot compute their tax liabilities separately. The two of them is the same capital allowance applied to them. That is the reason why we cannot compute their tax liability separately. Now, computation of adjusted profit for life business. Under the life investment income. In the question, we are told that a total of 12 million investment was received within the accounting year for life business. 12 million investment. So this 12 million, where is the breakdown of this 12 million for life? Where is the breakdown of this 12 million for life? Look at the breakdown. Note 5. Note 5. Look at the breakdown. Look at the breakdown of that 12 million. Note 5. Among the 12 million, we have interest on debentures. We have interest on fixed deposits. So under the format now, my computation of adjusted profit for life will be the first working note. I want to compute adjusted profit for life business. My investment income, 9,450,000 debentures. Interest on fixed deposits, 2,605,000. Out of the total investment income of 12 million for life, the only one that is subjected to tax among them is interest on debenture stock, interest on fixed deposit. Dividend is not subjected to tax because it is a frank investment income. After I get investment income for life, I will now go to other income. Do I have other income for life in this question? In this question, is there any other income apart from investment income? According to format, you go to other income like management fee, rent received. In this question, we don't have other income like management fee, rent received, commission received. We don't have that. So the only thing we have for life business as part of income in this question is investment income. Summation of my investment income will give me my gross income. And my gross income is going to be 12,055,000. 12,055,000. Another thing is, in this question, if you look at the format, after you get your gross income, you less, where is the format? If you look at the format, after you get your gross income under life, you now less general reserve. Do we have any information in the question we are solving? Do we have any information on general reserve? General reserve carry forward, life fund carry forward, net liability on policy. Do we have information regarding that in the question? We don't have that. We don't have information on general reserve. The only information we have that can help us in this question is information as regards to special reserve. How do we less special reserve? Special reserve, higher of 10% of net profit and 1% of gross premium. 1% of what? Gross premium. So after my gross income, I cannot less general reserve because I don't have information regarding general reserve in this question. As regards to special reserve, I have the information regard to special reserve. I know the gross premium for life business. What is the gross premium for life business? Let's go and look at the gross premium for life business. The gross premium for life business in the question, if you look at the summary of the premium, out of all these premiums stated, the total premium is 72,050,000. Which one belong to life among them? Which one belong to life? The only one that belong to life is premium received on life assurance, which is what? 17,250,000. That is aside that, I see that there is some premium that is yet paid for. 4 million was collected as premium for life. That means for me to get the total gross premium for life, 17,050,000 plus 4 million. It will give me how much? It will give me
21,250,000.
250,000. Eh? How much?
21
How
million
much is it going to give
250,000.
us? 21,250,000. So while computing the adjusted profit for life, we said 1% of gross premium, higher or special reserve, 1% of gross premium. What is gross premium for life? 1% of 21,250,000. How much is it going to give us? One percent of 21,250,000. How much is it going to give us?
212,500.
You can see how I get the 212,500. I added all the premium for life, both the one that they have paid for and the one that they are yet to be paid for. I added it together. That is the gross premium for life business. You know, I want to compute adjusted profit for life business. Higher of 1% of gross premium or 10% of net profit. Are we giving net profit for life business in this question? No, we are not giving any net profit. So 10% of net profit is 0. 10% of net profit, since there is not net profit, is 0. So which one is higher among the two? $212 is higher, is what I will take as my special reserve. After my special reserve, other allowable expenses. Other allowable expenses. What are the other allowable expenses for life business? Other allowable expenses for life business. Are we giving other allowable expenses for life business? We are giving note 4. Administrative expenses for life business, salaries and for life business, other all these things, all these expenses, these 3 expenses will be posted under other allowable expenses for life business. You can see administrative expenses, salary for life department staff, other allowable expenses. If we add the three of them together, it will give you 9,462,000. 9,460 what? 462,000. Plus your special reserve. That means all the expenses you are going to minus from this gross income of 12,055,000 is going to be 9,462,500. Your adjusted profit for life business will now give you what? It will give you 2,592,500. This adjusted profit for life. You will now take it to the main solution. Adjusted profit for life, 2,592,500. We now go and compute adjusted profit for non-life. If we want to compute adjusted profit for non-life, we start with premium. We start with what? Premium. Look at the premium in the question. The total premium we have in this question is 72. For life. For non-life, the others will be for non-life. Premium income is non-life. Premium income received on industrial asset is non-life. Other policy premium is non-life. So, computation of adjusted profit for non-life. You can see I added all the premium together. Premium on burglary, premium on industrial asset, other policy premium, accrued premium. This accrued premium is given to us as at the end of the year. They say the premium that they're here to pay for. Look at it here. Accrued premium. 4 million is here to collect for life. Why for non-life is what? 2 million premium is here to be collected. So, because why computing adjusted profit for life, for non-life, you start with gross premium. You start with what? Gross premium. You added all your premium together. That means your gross premium is 56,800,000. In this question, we don't have premium return on cancel policy. We don't have reinsurance premium. Our net premium still remain 56,800,000. In this question, regarding to life business, we don't have investment income for life business. But the only income we have for life business, which is part of other income, is estimated claim of previous year. We are given in this question. It will be part of income for life business. Look at it. Estimated claim of previous year. Where is the estimated claim? We're told that estimate claim of previous year. Where is the estimated claims of previous year? We can see that estimated claim for the year 2022 was 274,000. That means estimated claim for the year 2022 will become an income in what year? in 2023. So it's part of the income. That means my gross income, the premium plus that estimated claim, my gross income is going to be what? 57,074,000. I will now less liable expenses. Under non-life, the first thing I will less from the gross income is unexpired what? Risk. Reserve for unexpired risk. Reserve for what? Unexpired risk. If you look at the format, the first thing I will less is reserve for unexpired risk. What is the reserve for unexpired risk in this question? Reserve for unexpired risk. Unexpired risk relating to, it relates to non-life. It does not relate to life. It's not in the format for life. Unexpired risk. Look at note 2. The management of the company calculate about how much 14 million as reserve for unexpired risk in 2022. Why unexpired risk in 2023 is what? 17.5 million. The unexpired risk we are going to use is different between unexpired risk for the year and unexpired risk for previous year. That means difference between 17.5 million and 14 million. What is the difference? What is the difference?
8.5.
That is the unexpired risk we are going to use. Carry forward, less brought forward. Unexpired risk carry forward in this question is 17.5. Unexpired risk brought forward in this question is what? 14 million. So in your unexpired risk, carry forward, less brought forward. You will get how much? 3.5. You can see how we get this 3.5 for unexpired risk. From the carry forward, you less brought forward. Do you understand? After your unexpired risk, you now less every other expenses that relate to non-life. What are the other expenses that relate to non-life? What are the other expenses that relate to non-life? Total expenses relating to non-life business. Number 1, claims, commission, administrative expenses, depreciation. Are we going to less depreciation too? Under our expenses. Are we lessing depreciation? No, because depreciation is a disallowable expenses. We know generally that depreciation is a disallowable expenses. So the expenses we are going to less as an allowable expenses under non-life, claims 4,875,000, commission 3,420,000, administrative expenses 3,430,000. So let's look at them. You can see this is inside the administrative expense. How much is the administrative expenses? How much is the administrative expenses? 5,430,000. Abi, we were told that inside this administrative expenses, there is one disallowable expenses inside it. Which one is disallowed inside this administrative expenses? Which expenses is included in this administrative expense that is a disallowable expense? Who can tell me?
Depreciation.
No. Administrative expenses.
Loss on sale of fixed assets included as
Loss
main
on
expense.
sale of fixed assets. You know, loss on sale of fixed assets is a disallowable expense. It's not allowed. It has been included in wealth. In the administrative what? Expenses. If you minus 1,450,000 from this 5,430,000, how much are you going to get as balance? How much are you going to get?
3,980,000.
That is the administrative expenses you are going to recognize as an allowable expenses under non-life. 3 million what? Can you see that? 3,980,000. That is the administrative expenses we are going to recognize. At the end of the day, you will add all your expenses together. If you add all your expenses, starting from provision for unexpiries, reserve for unexpiries, claims, commission, you add your administrative expenses. If you add everything together, it will give you 15,775,000. If you minus it from your gross income, 56,800,000. If you minus it from this your gross income, 57,074,000. You are going to get what is called what? Adjusted profit of 41,299,000. 41,200 and what? 99,000. That will be your adjusted profit. Do you understand? So this adjusted profit is for the non-life. You go back to your computation. Adjusted profit for life, 2,592,500. Adjusted profit for non-life, 41,299,000. Total adjusted profit, 43,891,500. The reason why we do it like this is because the capital allowance given to us, the examiner does not separate the capital allowance that this one is for life, this one is for non-life. We will have compute the tax separately. Assuming we are giving capital allowance for life and non-life separately, we compute the tax liability of life and non-life separately. Are we making sense? Since they give us combined capital allowance, that is the reason why we stop with adjusted profit. We now less the capital allowance. So now I want to less my capital allowance. In the capital allowance given to me, I have capital allowance brought forward, initial allowance, annual allowance, balancing allowance. I will add everything together. If I add them together, if I less them, the total of all these allowances is 1,548,500. If I less them from my total adjusted profit, I will get my total profit or taxable profit of 42,343,000. 42,343,000. That will be my total profit. Once I get that, I can now compute tax liability. What will be our tax liability? Our CIT will be at what percentage? 20%. Why did I use 20%? Why did I use 20% as my TIT? If we add
Medium-sized
gross
company.
income,
Medium-sized company.
yeah, if you look at gross income for life, 12,055,000. Abi, look at gross income for non-life, 57,074,000. If we add two of them together, is it up to 100 million? Is it more than 100 million? Is it more than 100 million as their turnover? No. That is the reason why I use 20%. Assuming if we add them together, it's more than 100 million. What percentage are you going to use as your CIT?
30%.
30%. So 20% of 42,343,000, it will give you 8,468,600. Anytime you compute CIT under insurance, you must test your minimum tax. One of the major things in insurance is they are specifically in the examiner. Examiner is more specifically to your minimum tax in insurance. Anytime you are computing tax liability in insurance, you must compute your what? Your minimum tax. If you compute minimum tax for life, 0.5% of gross income of life, it will give you 60,275. If you compute minimum tax for non-life, 0.5% of gross premium. Anytime we want to compute minimum tax for non-life, we use gross premium, not gross income. We use what? If it is life, gross income. If it is non-life, we use what? Premium. Look at the solution under non-life. You will see the difference between premium and income. This is gross income, premium, 56,800,000. Look at the gross income, 57 million. But if I want to compute my minimum tax for non-life, I would rather base it on 56,800,000 rather than basing it on 57,074,000. But if it is life, I will base it on gross income. Do you understand? If we add the two minimum tax together, minimum tax for life and non-life, if you add them together, is it up to 8 million? Is it up to 8 million?
No.
No. That means this company will pay their CIT based on the normal rate of 20%. Assuming you add the minimum tax of life and non-life together, if we add them together, they are not more than 8 million. That means if the company want to pay company income tax, they will pay it based on the amount of what? Based on the amount of minimum tax. If the minimum tax is higher than the normal CIT, are we making sense?
Yes.
In this question, if we add the two minimum tax, it's not up to 8 million. That means this company, they will pay the normal CIT using the normal rate of 20%. But if the summation of the minimum tax is higher than this 8,468,000, that means if the company want to pay CIT, they will pay it based on the amount of the minimum tax. After that, our TET or EDT, education tax, 3% of adjusted profit. 3% of what? 3% of adjusted profit. Where is our adjusted profit? This is our adjusted profit. Three percent of it. Three percent of adjusted profit. Three percent of adjusted profit will give you 1,316,745. Why police development levy? Police development levy. 0.005% of adjusted profit is going to give you 2,195. You can as well as compute for your NICTA. You can as well as compute for your NICTA, which is 1% of your profit. If you don't know your net profit, you can use your adjusted profit to replace your net profit. Any question on this? Any question?
No.
Do you have any? Okay, go ahead. You want to ask a question?
No, I don't have any question.
Okay. Let's look at one more. Let's look at one more. Let's look at one more. Let's look at this question 8. Somebody should help us read this question 8. Oh yeah.
Life Nigeria Insurance Company PLC is a life assurance company. The company provides insurance cover for life contracts. Below is the extract from the financial statements for the year ended 31st December 2020. Particulars and year 2020. Actuarial surplus 617104040. Investment income, fee income, other operating income. Not here. Section 8. I finished that one on the board.
Okay.
Okay. Other operating income, life fund account as at 31st December 2020. General reserves, gross premium written off maybe. Profit before tax, management expenses, depreciation, commissions paid, NITDA levy paid, 42896. I finished what's on the board. Okay, capital allowance claimable. That's all.
Okay.
So,
I'm coming. I want to just copy something.
no problem.
Yeah.
Done with this page.
Okay.
Net liabilities on policies as at 31st December 2020. Administrative expenses required. Compute the taxes and levy payable for the relevant year of assessments, taking into consideration the relevant amendments to the tax laws. Ignore VAT, 15 marks.
Okay. Thank you very much. So I want to bring out the Excel copy of this solution. I just saw some correction I need to do in this Excel copy of this question solution. Okay. This question Is it for live business or non-live business? Is it for live business or non-live business?
Live business.
For life business.
It's for live business. If you want to solve a question on live business, we need to start with investment what? Income. Abi,
Yes.
do we have investment income in this question? Yes, we are giving investment income in total. Can you see? Can we see that?
Yes.
After that, other income. Part of the other income, fees income, will be part of other income. Abi? Operating income will be part of other income. Actuarial valuation surplus will be part of other income. If you look at the format I gave you. All these are the other income we have in this question. Look at it. In my question, you can see investment income, 792,342,640. Other income, first, fee, 123,781,840. Other income, other operating income, 4,519,760. And we have another one called actuarial revaluation surplus, which is 617,104,040. At the end of the day, my gross income is going to give me 537,748,280. That is my what? Gross income. Deduct allowable expenses. In the format, the first allowable expenses I'm going to deduct is what? Under life. General reserve. Abi? My general reserve carry forward. This is my general reserve carry forward. Plus life fund account. This is my life fund account. I will add the two of them together. I will compare it with net liability on policy. Do we have net liability on policy in this question? Do we have net liability on policy? Yes, we have. Look at it. So go back to the solution. General reserve carry forward, life fund carry forward. If you add the two of them, it's giving you 676,026,540. You compare it with what? Net liability on policy. You compare it with net liability on policy. How much is your net liability on policy? 600,740,000. Which one is lower among the two? You take the lower one. Which one is lower?
Net liability of policy.
So you can see, I've taken the lower to this side. After taking that one, another allowable expenses I'm going to remove is what? Special reserve. Abi? My special reserve, 1% of gross premium, higher of 1% of gross premium, or 10% of net profit. In the question, do we have gross premium? In the question. Do we have gross premium in the question? Are we giving gross premium? Let's check.
Yes. Yes, there's gross premium.
This is gross premium. 1% of it. 1% of it. So 1% of this gross premium. Are we giving net profit in this question?
Yes, profit before tax.
Correct. Higher of 1% of gross premium or 10% of what? Net profit. Look at 1% of gross premium is giving me 16,592,164. 10% of gross profit. Look at what is giving me 56,460,544. Which one is higher among the two?
10% of net profits.
So I will take that. That is my second deduction. What is my fourth deduction I'm going to deduct? General reserve, Abi. My second deduction, special reserve. My third deduction, other allowable expenses. Are we giving other allowable expenses in this question? Are we giving other expenses in this question? What are the other allowable expenses? Management expenses is allowable. Abi, is it not? Depreciation is not allowed, Abi. Depreciation is not allowed. What about commission paid? Is it allowed? Is allowed. NIGDA levy paid. The NIGDA you paid for last year is an allowable expenses in this year. Is allowed. Administrative expenses is also allowed. Administrative expenses is also allowed. So those are the other expenses I have, other allowable expenses I have. I will come and write them. I will now add them together. Management expenses, commission pay, administrative expenses, NIGDA, I will add them together. If I add them together, plus net liability on policy, which is general reserve, plus special reserve, 56. If I add every deduction together, I will get 1,315,773,030 naira. I will now minus all these total expenses I want to deduct. I will minus it from what? From my gross income. I will minus it from my gross income. If I minus it from my gross income, what am I going to get? I will get adjusted profit of what? 221,975,250. From my adjusted profit, I will less capital allowance. What is my capital allowance? My capital allowance is given 16,592,164. Once I less the capital allowance, my total profit or taxable profit is going to be 205,383, 205,383,86 naira. That is my total profit. I can now compute my tax liability. If I want to compute my tax liability, my CIT, is it going to be 30% or 20%? In the question, if you look at my gross income, it's almost 1 billion, which is more than 100 million now. So yes, my CIT,
30%.
30% of what is my CIT? 30% of what? Of this total profit, which is 205. 30% of 205, 383,086. It will give me what? 61,614,926. If I get that, if I get 61,614,926, I will test for what? What am I going to test for?
Minimum tax.
Minimum tax. My minimum tax is going to be 0.5% of gross income. 0.5% of gross income is giving me 7,688,741. It's lower than the actual CIT. That means I'm going to take the actual CIT. If I take the actual CIT, what about my company income tax? What is my education tax? TET. My TET education tax as at this 2021 year of assessment, I think is 2%, not 2.5%. It is 2%. I will correct that. As at 2021 is 2%. Education tax is 2% as at 2021. 2% of adjusted profit. What would be 2% of adjusted profit be? Education tax, 2% of adjusted profits.
$4,439,505.
I want to send the, so this material, I will send the updated copy. So it's good while solving the question to look at some areas that need correction. So my education tax is 2% of adjusted profit, which is 2% of 4,439,505. That is my education tax. That is 2% of adjusted profit. So my police development levy too, I will compute that. Police development levy, I will compute that too. So I will compute my police development levy too. So that is how I compute this tax. Any question on this? Do we have any question on this question? Yeah.
Are we not going to compute the NITDA?
We're supposed to compute the NITDA.
Okay.
I will send the correct part now for computing the NITDA. Please, we need to compute the NITDA. Yes. I will do the correction now and send it. We need to compute the NITDA. Any other question? Any observation? Any query? So in the absence of no question, that means we are done with insurance. There is one particular insurance question. The solution is not here. The question is not here. It's in the ICAN pack. That question have both life insurance, non-life insurance, and reinsurance. It's part of our revision question. I will solve that question in the joint house. So I will send the question maybe by end of the lecture today. In the night, I will send the question. But it's part of the question that we use as a revision. So that is it on insurance. The only one we have left on taxation of specialized business is taxation of real estate investment company, which I'm going to do on Friday. Taxation of what? Real estate investment company, which I'm
Sir,
going to
hello,
do.
sir. Sorry. That Friday is not feasible for me. I have lecture.
Which lecture do you have
My own
on Friday?
personal lecture. Yeah, personal, not this one.
Madam, you know what you do? You can watch the video later, man. I'm very sure. You know, there is no time again. We need to squeeze the time. It's just 1 hour lecture. You will watch the video. The video will be so interesting. Please, because that Friday, I have to join other students, our physical students from other center. I will join them together to do that topic, taxation of real estate. It won't take us more than 1 hour. It's very simple. Just for us to use that time, please. I know you have another lecture. You can watch the video later. So it's just 1 hour. The material for that taxation of real estate is part of this material I sent to you. It's so explanatory. It's well understand. It's just for me to explain it for better understanding on that Friday and solve one question I want to solve on that real estate. So it won't take us more than highest maybe like 45 minutes, 50 minutes. So if you are not around, maybe you can watch the video lecture. So
Sorry, please, what time did we say on Friday?
starting from 8:30 to 9:30.
Okay.
Excuse me, sir.
Yes.
Hello, sir.
Hello, I can hear
Okay,
you.
so the real estate, is it the same thing with the reinsurance?
Not reinsurance, not real insurance. It's not the same thing as the real insurance. Taxation of real estate investment company. How do we tax company engage in real estate, like Adron's properties?
But we've not treated real estate.
Yes. I know we have a real insurance we have not talked about here, but I don't expect real insurance question to come out. If I'm saying that there is a question that I will send on insurance, that question has both reinsurance, life insurance, and non-life insurance. That question is in ICAN part. We will solve that question. When we are solving the question, we solve the tax for life insurance, non-life, and reinsurance. By that time, we can briefly discuss reinsurance. But our major topic on Friday is for us to finish this taxation of specialized business. The only area that we have left is real estate investment company.
Okay, sir.
Taxation of real estate investment company is the next topic after insurance. Is in this our part. If you strolled up, you will see taxation of real estate investment company. So it won't take us too much of time for us to do. It's one of the new area introduced by Finance Act 2022. So this is the beginning of real estate investment company. Just for us to explain it, what are the source of real estate investment company income? What are those income taxable? What are those income non-taxable? So this is the topic we want to do on that Friday by God's grace.